Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Hello, welcome to the Risk Intel podcast. I'm Ed Vincent. Please join me in welcoming Doug Cargnel to the podcast today. Doug brings almost 30 years of operational risk management and audit experience with medium and large financial institutions, including about 2/3 of that time at a top 10 US bank, where he focused on developing and implementing risk and control self-assessment solutions and spent significant time facing off with banking regulatory agencies. Doug, welcome to the podcast.
Thanks, Ed.
During our first session, we laid the foundation and talked a bit about what is a risk and control self-assessment and how does that fit in within a robust enterprise risk management framework. Today, we're going to take one step beyond that and get into the blocking and tackling of enacting an RCSA. So Doug, let's jump in there. Once a financial institution has decided to enact a risk and control self-assessment, what comes next? How does that institution define the risk assessment universe? How do they get out of the starting gate, so to speak?
Yeah, it's funny because you would think, well, geez, how hard could that possibly be? But over my 20 plus years experience in an RCSA space, it's actually a really important and oftentimes a difficult process to define that universe. So let's just start with the biggest banks. The regulatory agencies would expect that all of their processes, technology, systems, products would be addressed in some shape or form in an RCSA. But when you get to the smaller, more mid-sized banks, they may want to start with their most critical products or services, and then say, hey, this is where we're really going to target our RCSA. We'll be really, really clear on where we're going to begin this journey. So we're going to define the universe as, let's say, we're going to use our product offerings to define the universe. Other organizations may say, well, let's look at our major processes. Let's look at things from an end-to-end perspective. By the way, that's where I think organizations should start. Others may choose to say, let's do it by organizational unit, right? And then let's put those all together to define the universe. So in answering this question, Ed, I actually kind of went even a little bit further, is because once you define that universe, you have to think about how do we parse it into logical chunks.
Yep.
We can bring people together and talk about the risk, the bad things that could happen to prevent that particular area from meeting its business objectives, and then evaluating and bring the right people in who can help identify and assess the controls that are in place for there. So really, once you define that universe, the next step is how do we parse it into logical pieces so that we're not trying to boil the ocean through this RCSA process, but really talking about risks that are really relevant to a particular area, so you can have a very targeted conversation about those risks and the controls.
Who would, in your experience, who was in those conversations when you were defining that risk assessment universe, or as you said, right, determining how you break it into consumable or logical or reasonable chunks there? Who's making that call? Who's figuring that out?
Yeah, really good question. It really should be very collaborative between the business, the people who are delivering products and services, because ultimately they are going to be the consumer of the RCSA, right? They're going to be the ones who are using it. So you want them to be able to define the universe and those risk assessment units in a way that's meaningful to them, right? Typically, though, you would have a risk person helping to facilitate that conversation, to present the options of the way of looking at and executing the RCSAs so that the business can evaluate various options and approaches, because there is no one size fits all for any organization. The really important thing is you have good business buy-in, that they believe they will be producing an RCSA that will help them to better manage their business. So you really want them to ultimately sign off on the risk assessment universe and how that universe is parsed into logical pieces.
That's great. Pardon me, that's really, powerful, the theme there of collaboration, right? And it also reinforces one of the things we talked about in our last episode, of the fact that this isn't just window dressing, right? This has got to have real value to the business,
Right.
and to achieve that buy-in there that you're talking about. We've talked there about then breaking the universe up into pieces. One of the other themes that we've talked about in the past is a taxonomy that everyone can understand, a taxonomy that is standard, consistent, reusable. You talk a little bit about that concept of taxonomy and why that's meaningful here.
Yeah, it's a really important next step or tool in the process, and for a number of reasons. One is it's very difficult to for me as, let's say, a risk expert working with you, Ed, and you own a business unit, and say, hey, Ed, let's talk about the risks to your particular business unit. Um, and you would be able to rattle off some things that are top of mind. But what you really want to do is be comprehensive around the most significant risks. The taxonomy is a tool that you can go through and say, hey, let's talk about operational risk. But operational risk is a really broad category. Let's start with people, process, system failures. Let's talk about fraud. Let's talk about cybersecurity. Hey, do you use models? Should we talk about what could go wrong in the use of models, right? Lots of laws and regulations. Let's drill in on compliance risk, right? Those taxonomies help us to think through all the various risk exposures in a really logical manner and help us to feel that we are being comprehensive. So that's number one. Number two is, at the end of the day, and as we talked about in the prior session, organizations should define their risk appetite. Nothing more than, hey, how much exposure can I live with to risk A, right? Well, now with this taxonomy, all of the risks from the various RCSAs performed across the organization can be aggregated. And then you kind of say, hey, in aggregate, we are not managing this risk within appetite. We are in maybe 80 or 90% of the businesses, but there's this 10% that's really kind of out of appetite. And I'm worried about it, right? So now we know where to target, but you're not able to bring that aggregation to the organization without having a standard taxonomy, because I might be talking about a cyber risk one way, you're talking about the exact same risk, but defining it in a different way. And we don't even know that we're talking about the same things because we weren't part of the same conversation. Does that make sense?
Yeah, it makes complete sense, and it ties into one of the prior themes we talked about there of an enterprise risk management framework, which is really predicated on aggregation and then being able to pull all that together. And so I think that, right, your thoughts there around allowing you to think through things logically and comprehensively, define that risk appetite and how much exposure you can live with, and then enabling aggregation, right? Pretty compelling reasons to have that standard taxonomy. Yep. Doug, if you were enacting then a risk and control self-assessment, are there any pitfalls or traps that you want to avoid, things that you want to look out for, and perhaps warn folks to get ahead of, or get on the front foot if they encounter these things?
Yeah. So the pre-work of an RCSA is really important. And what do I mean by pre-work? It is really being able to say, okay, hey, before we start this RCSA, let's be really clear of how we're defining the unit that we are performing the RCSA on, right? What's the starting point? What's the end point, right? So that gets everyone aligned. It's then really important to help the business folks who don't think about risk and controls necessarily like we do on a day-to-day basis, to really simply understand, what are we talking about here? Hey, We're simply talking about risk of those bad things that can happen, right? That cause you a lot of pain. And then controls are nothing more than those activities that you and your team perform to either prevent them or detect those bad things from happening, right? So let's go in now and use our tools, our risk taxonomy, to really think about how could any of these risks manifest within your particular area of responsibility. Let's identify those risks. I'm a big proponent of identifying the risk first. Then you can come back, and it's also very helpful. We talked about a risk taxonomy, but it's good to have a control inventory developed as well. This is an area where you might be able to work with your audit partners who have been auditing a particular area, have a good basis of the types of controls that they would expect to see, right? And help then the business folks to think through those activities. Control activities are nothing more than a specific set of activities within a broader process, right? So it's, you got to kind of, again, prepare and educate the team of what's the difference between just executing a step in the process versus what's a real control activity. If you can do that pre-work ahead, you're going to have a much more effective facilitated RCSA sessions, right? And I do believe the facilitated sessions are very helpful. And typically facilitated by someone who has some risk experience, has executed RCSAs in the past, right? Because it can help people move through some of the challenges that beginners may be facing.
So you've got me taking copious notes here as we're going through this. Lots of fantastic content here. And I think a great roadmap for someone that is thinking about how do I get started in this area, right? That I've got a commitment to go there, and now I'm really ready to get out of the starting gate. So I think there were a handful of themes that we talked about here today. You know, collaboration with the business was a big theme there up front that we talked about. And that really, you know, being important to bring the business and the risk professionals together. Getting into a standard risk taxonomy and control framework there that you mentioned at the end, that provides the baseline, if you will, so that you've got consistency, whether it's defining your risk appetite, thinking logically through the risks and the controls, and then ultimately enabling aggregation. And then I think on that last theme that you brought up there when we talked about the pitfalls of education, right? It really begins with helping that business team understand why we're doing this and what the value is. If you have that in hand, then those facilitated sessions are going to be a lot more effective because folks are realizing the purpose of why we're going down this path. So yeah, thank you very much for giving us that roadmap here, Doug. We appreciate it, and we look forward to coming back one more time and talking about tools and the regulatory interaction around RCSAs.
Yeah, look forward to the next session, Ed.